Picture this. You picked up a second job to get ahead. You worked hard all year, and then at tax time, instead of a refund, the ATO hands you a bill. If that's happened to you, I want you to know it isn't a failure on your part. Almost nobody is told how this actually works when they start a second job. The whole thing usually comes down to one tiny box you ticked on day one and one thing you forgot to check before you lodged. In the next few minutes, I'll show you exactly how to set this up so you get a clean, predictable result. And here's the number that causes all the trouble. This is the figure at the heart of it. For 2025-26, the tax-free threshold is $18,200, and according to the ATO, that's the amount you pay no tax on at all. Here's the part most people miss. It applies once per person per year, not once per job. So if you're working 2 jobs at the same time, the ATO says you should generally claim that threshold from just one payer, usually your highest paying one. Get that right, and everything else falls into place. So why does this matter so much for you? When you tick yes to the tax-free threshold, you're telling that employer to hold back less tax because it assumes you only have one income. Do that with 2 jobs at once, and both employers under-withhold because each one treats your first $18,200 as tax-free. Let me run the numbers 3 ways so you can see yourself in this. If you're on the lower end, say a combined $50,000, the gap might be a few $100s. In the middle, on around $65,000, the ATO confirms you might owe roughly $10,000 in tax but have only $8,500 withheld. That's a bill of around $1,800 instead of a refund. And if you're earning more, closer to $90,000, the shortfall can run into several thousand. The ATO says this is one of the most common reasons multiple job workers end up owing. The good news? It's completely fixable, and I'll show you how in 3 steps. Step 1. Fix your tax-free threshold settings. First, work out which of your jobs paid you the most over the year. That's the one where the tax-free threshold box should be ticked yes. For every other job you hold at the same time, you submit a new TFN declaration or a withholding declaration to that employer marking no tax-free threshold. You can grab these forms from your employer's payroll team or straight from the ATO website on their multiple jobs page. According to the ATO, this one change means only a single payer applies the $18,200 threshold, so your withholding across the year lines up with what you actually owe. And if your total income sits well above the threshold, you can even ask for a little extra voluntary withholding to build yourself a buffer. Now, I want to be upfront with you about something before we move on. Here's the honest part. Fixing the box helps, but it doesn't guarantee a perfect result on its own, especially if your 2 incomes are close in size or your hours swing around. The tax system withholds in steps, so there can still be a small gap. That's why you claim the threshold from one payer only, your highest paying job, and then treat the buffer as your safety net. Get this right and your year-end result should land close to neutral, a small refund, or a small amount to pay instead of a 4-figure shock. But there's another step people skip that undoes all of this. Let me show you. Step 2. Before you lodge anything, cross-check your income. Log into MyGov and open ATO online services, then go to the income statement section. Check that every single employer you worked for in 2025 or 26 is listed and marked as tax-ready. This is the step people skip when they rush to lodge early. The ATO pre-fills your salary and wages for you, but if a small or short-term employer reports late through single-touch payroll, an entire job can be missing when you lodge in early July. So don't start your return until every known employer appears, or until you've got your own payslips for anything that's not there yet. Then, when you're in My Tax, confirm the pre-filled amounts and manually add anything that's missing, including casual work, freelance income, and certain foreign income which the ATO says you have to include yourself. Here's why this step genuinely pays off for you. Imagine you forget a $2,000 freelance gig that wasn't pre-filled. At a marginal rate of around 30%, that's roughly $600 of tax you didn't report. The ATO will eventually match the data, amend your return, and chase that amount, plus interest running from the original due date. So that freelance income was never free money. Reporting it upfront just saves you the interest and the stress later on. Step 3. Claim your deductions properly, because this is where you get money back. When you lodge your 2025-26 return in My Tax, head to the deduction section. Under the new budget 21-26-27 measure, there's a $1,000 instant work-related deduction you can claim without keeping receipts if you're eligible. For someone in the mid-income brackets, that typically saves around $250 to $300 in tax, according to the announced measure. On top of that, add any genuine work-related expenses, tools, uniforms, professional subscriptions, as long as you've got records to back them up. Review every entry before you hit submit to make sure it's reasonable and accurate. Now, here are the 2 mistakes I really want to save you from. The first mistake is lodging too early. I get it, it's tempting to jump in on the 5th of July to get your refund fast. But if your employers haven't finished reporting, you'll lodge an incomplete return. The ATO then amends it once the missing jobs data comes through, and you can end up owing the extra tax plus interest, all because you were a couple of weeks too keen. Waiting until late July, when everything shows as tax ready, costs you nothing and removes almost all of this risk. And the second mistake is even easier to make. The second mistake is assuming this only matters for 1 year. If you keep double claiming the threshold and missing income year after year, the costs quietly compound. Roughly $2,000 a year of shortfalls, and interest over 5 years is more than $10,000 in unexpected bills. Money that could have been sitting in your savings or your super instead. That's an illustrative figure, but the pattern is very real. Fix the setup once and it keeps working for you every year after. Let's pull it all together fast. 1. Claim the tax-free threshold from your highest paying job only and tick no threshold on every other job. 2. Log into MyGov and check every employer is listed and tax ready before you start, then add anything that's missing by hand. 3. Wait until late July, claim the $1,000 instant deduction if you're eligible, and add your receipted work expenses. Do those 3 things and your tax bill stops being a mystery and starts being something you actually control. If you've made it this far, you now know something most multiple job workers don't, and you can act on it today. Your first step takes about 5 minutes. Check which of your jobs is currently claiming the threshold, because that one box change makes the biggest difference of anything we've covered. This has been general financial information only, not tax advice. For your own situation, check the ATO website or chat to a registered tax agent. If you want to go deeper, the work-related deductions you can actually claim without an accountant is exactly what we cover next. I'm Sophie. I'll see you there.